Reports that Amazon is in the crosshairs of President Trump is making investors very skittish about tech. First, it was Facebook and the data scandal there. Now it's Amazon's tax treatment. Listen to what Peter Thiel says about the company.
Amazon is the most ferocious company in the U.S. At this point. And if you were, it is probably the company that you don't want to be competing against.
Ferocious indeed. Before the drop yesterday, Amazon shares had soared more than 70% in the past 12 months. That's a reflection of, quite frankly, the love affair that investors have had with the company. But love is fleeting, so we ask, will investors continue to cash out? The stock now in correction territory. We bring in Mark Avallone of Potomac Wealth Advisors. What do you think, Mark?
Well, this is another case where the president, who loves the stock market and likes to talk about it as a barometer of how well he's doing, issues statements coming out of the White House that really put pressure on stocks. And that's what I don't understand about the way he's going about it. That said, there really have been issues with what Amazon leaves in its wake. Look at what happened in retail. They were smart enough to know they could bypass not only state income tax, but an expensive shopping mall structure. And if you drive through the heartland of this country, you will see empty shopping malls. So the president is onto something, but what investors want to see is a more calmer approach and something more measured and not something volatile through a tweet that can rattle the markets.
What is the president's real beef with Amazon, though? Do you think it's the way it drives mom and pops, for instance, out of business, arguably? So is it its business practices, or is it the animus of its CEO, Jeff Bezos, who also owns the not Trump-friendly Washington Post?
Well, that's hard to say. You'd have to look into the man's heart. But I think that retail has been hurt, and I don't know what he can really do. You know, the one area they've talked about getting into, which is pharmaceutical, that could be something that they use to slow Amazon down. The last thing that strip shopping centers across the country want to see is Walgreens and CVS following in the wake of a J.C. Penney or a Sears. So there are legitimate concerns from an economic perspective in local communities, and maybe that's what's driving this for the president.
Yeah, there seems to be a collision course very recently between politics and economics, whether it's privacy and Facebook or safety and self-driving cars, and now maybe antitrust regulations or tax changes when it comes to Amazon. What do you make of this collision course that we're seeing between Wall Street and Washington?
Well, I think it's the result of an absence of regulation. Not that I'm a fan of a lot of regulation, but these were the Wild West. These were companies that were unregulated, competing against industries that were highly regulated, whether it's Uber and how they drove out taxi companies, or Amazon and how they crushed retail. They were operating in the free market against industries that had their hands tied. So now we might be seeing a shift away from that, and companies, and even overseas in Europe, they're going to be looking at how do we rein these behemoths in? How are they impacting public policy? And that could impact their performance in the market. And
and these tech stocks, Mark, have gotten so big that they're an outsized part of our portfolios, that they're really swinging overall sentiment and overall averages. Mark Avallone, thank you for your perspective today.
My pleasure.